But anyway, getting into the point that I wanted to talk about here, when you look specifically at the Roth accounts, there's three things that are kind of secondary little benefits that come from that. First of all, Roth accounts don't have required minimum distributions. So right now, the age to start those RMDs, as they're called, is age 75 for anybody born year 1960 or later. So you have to take those starting at 75, and every year you get older, you have to withdraw a little bit more from the pre-tax accounts. Roth accounts do not have to do that. And the taxation versus tax-free component of it is not really what matters in this case. What I'm talking about is the fact that you don't have to take a required distribution means that money can stay in that tax-free account and continue to grow. If you have a pre-tax account, even if you have to, pay taxes on it, whatever the tax rate is, the fact of the matter is once a required distribution happens, that money can never go into a retirement account again. It cannot go into a tax-advantaged retirement account. It can go into a taxable account, but from that point on, all the earnings will be taxable every single year. So any interest, dividends, capital gains that you have are all taxable. So the fact that Roth money allows more money to stay in a tax advantaged vehicle for a longer period of time, as opposed to forcing you to take it out and do something else with it, that's a benefit.
I would say too, you think about this long term, we see this sometimes, they retire and I don't want any money. I want to leave it to my kids. Well, that's really nice. Is that right or wrong? I don't really care. It's your money. Do what you want.
Right.
But you think about now the benefit, right? You're not pulling any money from that. Then when the kids inherit that money, as opposed to a pre-tax IRA or a pre-tax 401k, you have to be very careful. Otherwise, you have a ticking tax time bomb for 10 years where you'd have this huge tax liability, where if you inherit a Roth, you have 10 years essentially where you wouldn't have to pull that out, and all that is tax-free growth. It is definitely a hidden benefit that is